Hello financial investors and welcome back to the channel. My name is Brent and today we are going to be doing our M1 Finance Roth IRA Monday buys here. We are going to be buying one stock today. I've already selected it, but I want to go ahead and cover some of the news going into Monday, the 15th of June 2020. So if you are brand new to my channel, have not yet subscribed, definitely hit that subscribe button below. If you do enjoy this video, find it helpful and entertaining, give this video a thumbs up. And if you have any comments or questions about anything covered in the video, M1 Finance, Robinhood, we will drop it into the comment section below. And of course, it's going to be a negative day on Monday, so let me know what stocks are you buying out there. And let's go ahead and get into the video. So as you can see here are the headlines here. Dow futures plunge as a possibility of a second wave grows. I know here in my area in Oregon, we've had cases slightly go up. I believe we had 4 in our county, so not a whole lot. I'm still going into work. I need to finish a couple things at work, but I think after I go ahead and do my installation of my network equipment, I'll go ahead and stay at home and kind of work from home after this whole process is done. But I do see the stock futures are down by quite a bit. Here we can see it's accelerating. So S&P 500 down right now 3.05, the Nasdaq down 2.49, the Dow Jones down a whopping 3.55%. So pretty bloodied. Now overseas right now in the world market, the Japan, England, German markets have not opened up. They should be opening up here in about an hour. It's a little bit after midnight right now when I'm recording this. It's 226 over in Hong Kong. It's negative 226, 227. So we can see that overseas right now the market is accelerating to the downside, and now we can see here that these points, 3% down in S&P and Dow Jones, and the Nasdaq is kind of catching up. So Friday, probably a little bit of relief in the market. Just very quickly, I know I took a bit of profits on Friday. That Friday, I kind of discussed it in my weekly recap. I took profits on a few different of my accounts where I was positive in positions that I hadn't been positive in the past. I went ahead and took a little bit of the profits off and just kind of let it sit in cash for the time being, because I do see this right here, this headline affecting the markets here in the future, as well as this upcoming quarter being a little bit rougher than others are expecting. Now, jumping over into the M1 Finance Roth IRA account, where we're going to be doing our Monday buys, we can see overall, the portfolio is kind of hanging on to some market gains, but I believe here on Monday we should see this completely vanish. Market gains going into the negative. Our return will still be a little positive as long as we don't go below that $1,200 limit as far as our earned dividends. So we may see by the end of this week the portfolio having lost a bit. It only takes 2 red days of about 3 to 5%. If we have 2 consecutive days for gains within the portfolio to kind of vanish. Now, as far as the cash balance, we have $86.75 sitting here in cash. And if we take a look at the 1 week performance, so 1 week, this last week, we lost about 5.91% or 1,400 bucks. Now, kind of taking a look at the markets, we did do our market recap, so I just want to do a comparison against the S&P and the Dow Jones, because that's what I like to kind of compare my portfolio to. So the S&P lost 4.78 and the Dow Jones lost 5.5. So overall, my portfolio was a little bit around the Dow Jones, a little bit lower, or it lost a little bit more than the Dow Jones. Now that is because if we sort this by our losers up top, we can see that the retail REIT SPG lost 14.24%, followed right behind by ABM Industries, Community Trust Bank Corp, Tanger Factory Outlet, another REIT, a retail REIT. So with the possibility of this pandemic making a full comeback here in sometime in the future, we have the upcoming months spelled Jason. Jason, not Jason Bourne, but I can't think of his last name. He's in all the horror movies. We have June, August, September, October, November. It all spells Jason, and a lot of people are expecting mayhem here for the remainder of 2020. So we're seeing a lot of these companies in retail and finance also drop, with companies lowering their interest rates. I know I'm getting rates on mortgages in the 2% range. I'm refinancing my own personal home at a 2.75. I'm also looking to buy another home as well, and those rates are getting offered in the 2% range as well. So there's so money is so cheap right now. So it's very crazy. But overall, market change for the week, pretty negative. Not a whole lot of positive out there. We can see only three positions were positive this last week. Consolidated Edison, a utility company. WP Carey, this is a REIT, a real estate investment trust. I'm actually surprised to see that positive. And Apple up a nice 2.2%. But all the Fangum stocks did very well. Facebook, Amazon, Apple, Netflix, Google, and Microsoft. There was very little loss. I believe the biggest loser was Google, down 1%, whereas Apple and Amazon were up 2% for the week. So pretty crazy. Now, as far as the dividends, we got a nice sizable dividends. Now, we're only depositing around $50 on a weekly basis to continue to dollar cost average our way for the remainder of 2020. But we can see here we have $86 sitting in cash. Now, we can see here we did our Monday buys here on June 8th. Then we got paid out $6.22 from Johnson & Johnson. Very nice payout from there. Chevron paid out $10.14. That's probably the biggest payout from Chevron that I've received. I have been buying up quite a bit of their shares here in the past few months going into the ex-dividend date, so a nice $10 payout from them. 3M paying out $7.82. Walgreens paying out $8.25. So if I take all these dividends and add them together, so we have 622 plus 1014 plus 792 plus 825. We got $32.53 in a single week from four companies. That's pretty awesome. For this portfolio, it's doing really well for a 2-year period. So if you started your portfolio, I started this with the intent, this whole portfolio, for the intent that other investors could see at the very beginning of this portfolio. On M1 Finance, I put $5,000 into it back in 2018. That was the base investment. Then on a weekly basis, I would dollar cost average, and you can see that over time, it doesn't take much. You put in $100 on a weekly basis. You pay yourself first every week. $115.38 is all it takes to pay yourself. You have bills out there. You're going to pay for your mortgage, your car, your insurance, all your little things. But make investing, paying yourself, make that a priority. Make that one of those automatic things in your life, and then everything else, such as your wants, comes second. That way, at least you're moving your money and getting ahead with investing. So that's the setup there. Now, as far as what are we buying here today on Monday? Now, I know the market's going to be taking a bit of a fall here. So with that in mind, I already have a few positions here that I've opened up. The ones that are going ex-dividend in June, I've opened them all up. So Stanley Black & Decker, it already went ex-dividend back on the 1st. Genuine Parts went ex-dividend on the 2nd. Lancaster went ex-dividend on the 8th. We have UGI went ex-dividend on the 12th. The recent one that I just started purchasing this past week, I could buy it more, but I'm not worried. It just went ex-dividend on Friday on the 12th. So that doesn't leave me with anything that's going ex-dividend here in June that I really want to be invested in. So now I'm looking at July companies. Now I started looking here at AT&T. AT&T goes ex-dividend on the 1st, I believe. So up towards the, see if it shows me here. I know ex-dividend for AT&T generally falls on the very 1st of the month here. So let's see if it'll show us here. It should be around June 28th. Ex-dividend day. Okay, here we go. So really early on in July is when it should go ex-dividend. You can see here it has a trend. It goes ex-dividend in May. I'm sorry, January. That's a 01. January 9th. Then it goes in April 8th. Then it goes in July 9th. Then it goes in October 9th. So around the 8th or the 9th of the months of 1, 4, 7, and 10. So I can expect AT&T to again go ex-dividend right around the 8th or the 9th of July. So AT&T is the company that I've actually decided to invest in here today because I see AT&T Right now it's down 10.87%. It is currently trading for around $30.50. I have $781 invested in it. It's one of the positions that I'd like to buy more of. I would like to buy about $120 more of AT&T. So here I'm going to be adding roughly, what is it, $86. So that's about $90 of equity going into AT&T. Also tomorrow, with the market being down, we may see AT&T start really low. It's $30.50 at close on Friday, and that's after a pop. So we might see AT&T in the 28s and the 29s here on Monday as I'm making this buy. So it would already be a little bit further down as far as the current price. It'd also have a lower percent change to the negative side, and I will be buying AT&T right around a nearly 7% yield. Right now, it's currently offering a 6.82% starting yield, whereas my starting yield is 6.08. So AT&T is going ex-dividend here in a little less than a month. So it's going to be the company here that I'm going to be targeting. So fairly quick and simple there. So I'm going to go ahead and look for AT&T right there. This is showing here as the return as negative 0.07, but that's because I have $84.53 of AT&T that is paid out to this account. So the earned dividends here actually work and kind of go against the market gain. So this has market gains of negative 84.92 and 94, and this has earned dividends of 84.53. So it kind of nullifies itself. But we're going to be going ahead and doing another buy here. And we're going to go ahead and just put everything towards AT&T. I don't really have anything else that's on the mind that I really want to purchase. So AT&T is going to fit that bill. And that is it, essentially it for this video. Now, kind of jumping back over into where I see the market kind of going here on Monday. I don't see any reason for the market to continue its trend higher. Here in the short term, I don't see any earnings that'll really push it higher as a whole. If you're looking at the whole market as a whole, I don't see any reason for the whole market to move higher with the current news that's out there, the upcoming quarter of all these companies releasing earnings. In the next quarter, we just got done with the earnings season, so it's going to be a bit till it all starts back up. And business is still very slow when I'm out there in the economy taking a look. Businesses are just not doing what they did in the past. So I don't see a lot of positivity out there in the market overall. Now, you might be able to find some individual companies out there that are doing stuff that is above and beyond. And that is maybe where you should be focusing your money and investing your time researching more and taking a little bit of a, maybe, I don't want to say a riskier investment, but just taking a chance on companies that are started up that are able to, you know, do really well in this environment. So that is going to be it for today's video. Thank you all for tuning in. If you guys did enjoy this video, definitely give this video a thumbs up. If you have any comments or questions going on about the market, a specific platform, want to let me know what stocks you're purchasing here on Monday, what you believe the market will do in the upcoming weeks or months, I'd like to hear your thoughts as well. So that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.